Hey, I'm back with another video. This time I'm going to talk about something a little bit different. I'm actually going to talk about a concept that has helped me quite a bit in trading and with technical analysis. Um, it's something that you may have come across if you've learned about price action or just the movement of price in general. Um, I think of this as the handshake or the kiss goodbye. Um, essentially, essentially what it is um, the idea that as price is moving, so here we have an uptrend, as price makes a high, a higher low, and then makes a new higher high above this previous high, that price will come down and retest that previous high before continuing onwards. Something like this. And just the opposite for price moving down. So we have a low, a lower high, a lower low, low, lower high, lower low, and then price will come back up, touch here before continuing down. Something like that. And so essentially price kisses itself goodbye, or gives itself a handshake or whatever. You want to think of this as essentially it touches before it continues onwards. Um, it's a really simple concept, um, but uh, it it makes a huge difference. Now, this idea that price will come back and retouch this level um, is important, and it's something I'm going to talk about a little bit more um, here in a bit. I'm going to jump into a few examples. So when I'm using this, I I base everything off the closing price. I find this just to be more reliable versus the wicks. So using just the closing price, so here on the sub candle, the closing price there, then on the down candle, the closing price there. So this is an example of a downtrend. And so here we have this high, then we come down and we make a low. We come back up and make a new high, but we fail to get above here before going further down. And so let me zoom in. Here you can see the same structure right there, right? And so if I mark this low here, you can see price came down, closed below this low, but then price comes back up, touches here before continuing down. Here we made a new lower low. Okay. And you can see that that is identical to this. Okay. So now an example to the upside. So here we have a low. We come up, make this high, come down, make another low, and then come up and make a new high. And so if I mark this high here, you can see this happens from one candle to the next. But you can see price comes down, touches, and then goes up. And so a little sloppy, but this is identical to that. Now, price doesn't always touch this right away. It doesn't always come back and touch this level right away. Sometimes it just kind of shoots up like that. You can see a few examples here. So here, this is a high. This comes down, makes a low, makes a new high. I'll actually use this. So we have a high, a low, and then once we close above this candle, we've made a new high. You can see though, we never came down and retested it. I'm going to remove these. All right. So the same is true here. Right, we made this high here, broke above it, never came down and retested it. Okay. There's a lot of examples of where we did test it, where we did test these levels. So for example, here we have a high. Once this candle broke above this previous high, you can see we came down 1, 2, 3 times. We have a high, a low. This candle came up and made a new high. We came here and we touched. Here we did not. We made a high, a low, and then immediately shot up. So if we just kind of extend these levels out. Actually, let's make it a little easier on ourselves. Do it like this. Just going to leave these here. And if we zoom out, you can see that price did eventually come back to these levels. Now, I'm going to delete this. If we look at some examples here recently, here, never came down and touched that level. Here, never came down and touched that level. Here, never came down and touched that level. So this move was really powerful and just really didn't give price any time to come back down. Eventually though, this was way too hot and it kind of cooled off really quickly. And price eventually came down to all these levels. Now, here, this is kind of a good example of a downtrend. And so if we take I'll talk about that a different time. But here we have a high, we have a low, we have a new high. This price here hasn't been tested. Here we have a low. You can see there we came up and we touched it. Here we have a low. Here price just goes all the way through it, so that's retested multiple times. But here we have this low, and you can see price closes below comes up and touches it, and then boom, comes down. We could also see the same thing here, kind of on a bigger level or a larger scale. So high, low, high. Once we broke below this low here, see, this is the candle where we closed below. So this candle is the one that broke below this previous low, and you can see the next candle comes up, touches this line, kisses that line goodbye, and now price continues all the way down, and like we saw, it continued all the way down to these levels. So yeah, hopefully that made sense. I kind of like this because it does help with trades. For example, if here, you set a short position up here, right? Instead of panic selling when price closed here, you could have set a sell order here, and you could see just how little drawback you could have had for all that. Same thing here. Right. It's like almost no. Same thing there. Same thing here. And then even in some of these shorter right, like long positions here. And so it just kind of helps with better entries. Obviously, you have to kind of manage your risk. But these types of setups have helped with really good trades. And like I said, they're just kind of all over the place here. Here. And anyways, I won't belabor the point. Hopefully you found that helpful. Hopefully the concept kind of makes sense. Hopefully the way I explained it made sense. So let me know what you think, and happy trading.